Crypto is back at the range low. The BTC short keeps printing. ETH is almost back at my entry. ADA got stopped out at break even. And the US stock market starts rolling over here. All of that in today's episode. Let's go. Welcome back, guys. We had another exciting week for the markets. Trump was calling for a ceasefire. Iran was saying fuck off and all that. So we have the usual noise going on. And I would say Trump did this on purpose. Maybe he thought there will be negotiations, maybe not, we will never know. But in the end, he created a bullish narrative for retail, and right after that, prices started to collapse. And we had this little bounce here, the one we were talking about, because I said, okay, once we start losing this low, hitting this demand, with a loss of this low, a bounce becomes likely. And we had that bounce on the US 100. The Nasdaq gives a little different picture because we didn't really reach that demand after we swept the low on US times. We did that in European times, we bounced from there. And now in US times, we also hit this demand. And I said yesterday in a little comment of my post that another bounce from here is not that unlikely, simply because price usually doesn't move in a straight line. I mean, it can obviously, but it doesn't have to. Usually we have some kind of bounces. But the US stock market is a highly correlated market, and so many people are just long, they're just buying index funds. And once prices start to collapse, it can become a cascade event pretty quickly because people get fearful, people start selling, people take profits, and then this starts trending down quite aggressive, usually way faster than we go up. And that's why being short is so nice in these markets, because usually shorts pay very quickly and you can use those profits to buy and invest into those higher time frame uptrending markets for most of the time. And I also made a post today saying that it's still mind-boggling to me how people are still just looking at altcoins. And it is, to be honest, it is, in my view, it's a severe case of Stockholm syndrome, because so many people just got wrecked with altcoins. If you talk to people, I'd say 80% never really made significant money with altcoins, or they paid it all back. And so I ask myself, why are people still buying altcoins? I mean, there is no rational sense to that. And the funny thing is, I can feel this urge in myself. It's always like, okay, but if there is like the tiny spark of a potential alt season ignites something in me where I think like, okay, good, this could make me a lot of money. But in reality, when did it ever play out like that? Ever since 21, like we can look at the totals here. Let's look at total 2. Ever since 21, we made this little insignificant higher high here, but ever since then, money is pretty much not really flowing into the market, right? We have this huge range here, and we could consider this a higher time from 3 drive. And as long as this is a range, I mean, this looks pretty much like ETH. So we can also look at total 3, because most people are not even interested in ETH anymore. They need the dream, they need the quick money. And the same picture. I mean, we are technically a good chunk higher, but you know, guys, how many coins really profited from that? It's pretty much none of them. There are a handful of coins who did super well. The rest got distributed over those thousands of coins. And so not a single coin is really giving retail what they really wanted. So we had this short periods of outperformance, but usually we retrace the whole move within a few months. And this is just now how the game works, because this was just to create a narrative and trap people into this narrative. And ever since then, it's a trading game. It's a range game. You need to take profits. You can reallocate those profits back if you know what you're doing. But to be honest, in my view, this is a lot easier in other markets. The crypto market is super erratic. They all move together. So you buy one, you pretty much got all of them. Yeah, and you have then some of those outperforming. But those outperformances, they are technically also just to attract buyers, because then it's like, wow, this coin is so strong, it's much stronger than every other coin, this is something special, blah blah. But in the end, it's market makers pushing this coin a little bit higher to make people pile into this coin to sell. Now, for example, there are other coins that say like, oh, ETH did not do so well from the low, and other coins did, and so they chase this coin again. So in the end, the altcoin game is a super dangerous game, and it requires real trading skills. And the majority, with working a job, having a family and everything, they really, in the end, most people just want to make money, right? It's not about buying altcoins for the sake of having this altcoin. In the end, the main goal of almost everybody is to make more money, to create a life of freedom. And there's so much more opportunities than altcoin, guys. It's, yeah. Still, talking about BTC here, as said, I kept the short. I didn't really trust this move. And we talked about this on Monday, how those bullish channels on the way down are nothing but to create liquidity, right? So what is creating liquidity? People are a little bit confused about liquidity in my view. They think liquidity is some kind of formation on the chart from the past, and liquidity is actually something that flows. It's something liquid, right? And what flows? If you see a move like that, what is really flowing? It's not taking the low, it's making higher lows, and higher highs and higher highs. So in the average retail mind, and especially the ones that are still here, because like I'm not talking about those, the majority who just looks at coin market cap, buying coins based on whatever, but those that look at TA, they see this as bullish market structure, right? They say, okay, this is now, we have a change of character, we have bullish market structure, and many are not even able to not chase. Many will just buy on the slightest signs of a little pullback up here. But if you have some trading skills, you will probably then like trade the range low, which is a good trade idea, right? I'm not saying this is wrong or something. You can trade the range low, target the range high, why not? But this is creating liquidity still. Even if you have a solid trade idea, you go long here, your stop loss will be somewhere below these lows. I mean, yeah, probably something like that if you trade the range. And your liquidity is laying in the order book. Your passive order, which is your stop loss order, will be there, and it is a selling order. And this is liquidity, guys. Liquidity is not something not graspable, something super secret or whatever. It's buying and selling in the end. And so you have those bullish channels creating this bullish impression to retail's eyes, and they start buying again. And then once the liquidation hits, this is what whales want, right? They want to have those liquidations to push price lower, because then they can scoop up those coins for a discount again. And this is only true for the coins that really will make it through this cycle. So the majority of coins, looking at the charts, they will probably never recover from this, especially should we really go for the next leg down here. And I'm not saying this has to happen, but I'm saying there is a good chance that this is right now on the play. And the funny thing is, how liquidity also works is how people think. Like it's always about people's behaviors. And you see that this is Friday. Then we have Saturday losing the low, then Sunday the first big candle, and on Monday the real big liquidation candle hit, and it's a 15% drop. And this is, I'm not saying we repeat this right now. I'm saying there is a chance that we repeat this right now, and you should always have a counter thesis to your longs and to your shorts and to everything. This is pretty much your invalidation, right? And your invalidation should not be, if there is no alt season, I'm going to be wrecked. No, your invalidation should be, okay, when am I selling and what is my potential loss from this idea? And should this play, look at this from a psychological perspective. You have Friday. What is Friday for people? Friday is usually for many people the best day in the week, because work is over, we go into to the weekend, we do partying, we meet friends, we meet family, whatever. And the weekend already starts bad. Then you have a Saturday, which is then also not that great in this case. And then you have a Sunday where everybody's recovering from partying, maybe even having some kind of withdrawal syndromes, depending on what they did over the weekend, and they maybe feel a little low anyway. And then you have this, and then you feel like a complete failure and everything. And yeah, this is on a psychological level. This is how market makers use weekends, use weekdays. It's not happening. It's always happening for a reason, right? Everything is happening for a reason. And this is a very nice thesis right now that we can observe, because we had the Friday dump into the range low, not anything invalidated, no nothing. Now let's see how the Saturday develops, and let's see how the Sunday develops. And I talked about this little channel here, and how the fact that we just trend up here is creating liquidity, because the best long setups usually they're not that easy to get in. It's usually not that you can simply buy and everything is fine. Usually the best long setups, they sweep the low somehow, they undercut the low, they give a more bearish impression. And this whole move, it looked so bullish all the time for retail's eyes, and looking it through that lens, it means obviously to me that it's maybe not that bullish. And you see we had the same pattern kind of here. And I see this as liquidity line. I'm not trading those trend lines. I'm looking at everything through the lens of retail and through the lens of what are people learning about the market. And you just need to go on YouTube and study those basic retail tutorials. They have hundreds of thousands of clicks, and it's not just like buy and hold altcoins anymore. People get a little more sophisticated by now. They look at market structure, they learn this and that. And especially in the bear market, similar than here, once this is happening, 50% drop for BTC, you can imagine what this looked to altcoins. It's only the survivors, it's only the ones that are able to face the pain and they want to improve and everything, and they start learning about market structure and TA. It's this part of the cycle that creates the quality amount of traders, because only the good ones will survive, and only the good ones really want to learn it, and they then stumble upon the whole trading retail market space, which is then learning retail patterns, learning retail market structure, everything. And guys, also closes, people think you have closes and then suddenly you have something super special fancy sauce. Everybody's looking at closes, it's not a fucking secret. And look at this, close above the high, close several daily closes above the high, still we nuked 50% here, daily close above the high, still we nuked 80% into the bear market low. What are closes really worth if you look at the chart like that? It's super interesting how people think like, oh yeah, you have a close above, this means something bullish. Here, close above, still we nuke. It's all about context, and those closes, they're predatory. So think about that. It's not black and white. It's not that you learn something. It's not because it sounds smart that it works. It works based on liquidity. It works based on buying and selling. And looking at the context here, it makes perfect sense that those closes were above. Those clean closes above. In this case, look at the weekly. The weekly gave a much better signal. You see those wicks at the top. You see those closes here pretty much all around the same level. Here again, wicks at the top, never closed above this. So the weekly, here we have a slight close above, you could argue, but it's not taking out this one. So the weekly showed actually the better picture in this case. But what does this mean? At some point, people understand that they should look at the weekly instead of the daily, and then you start seeing weekly closes above those highs. And suddenly the picture is not as clean anymore. And suddenly you get those manipulative weekly closes. In this case, it's showing weakness, right? All of those candles are showing weakness, big wicks at the top. But what happens here, we have those several close above. Again, for somebody who's not putting it into context, this might look at, oh yeah, we close above this, we're making higher highs. But the context was already that we are super overextended, we are in very high premium. And so the more fluid and the more you can integrate in your strategy and the more you can think about the buying and selling aspect, what is the real goal of the market maker? So for example, just think about being a market maker, being a whale. What would you do to attract the most amount of buyers or sellers at a certain point in time? And why would you do that? And how would you do that? And like think it through, and then you will see that it's not black and white. It's not like you have some magic sauce and you can apply it every time. Obviously, you change the program from time to time because there are smart people. They will figure out what you mean and what you want. And obviously, then you have to change a little bit in order to keep them engaged and to keep them misled. So now looking at the less manipulated market, Nasdaq breaking this low, as said, to me, very, very bearish sign for the whole risk market. This could unwind pretty quickly should people on Monday, for example, get another fear narrative or whatever. So stay alert here. As said, US 100 looking a bit different, but overall giving the same picture here. And based on that, I took all those shorts I've shown you, Apple here, Meta, everything developing super good so far. I also took Palantir here. And again, it's nothing super fancy, right? We had a dump. You remember I made the Palantir video. I'm going to link it here. And we had this pump here. And it was also based on, yeah, the Iranian war could like help Palantir to gain some traction right now, get new contracts, whatever. It was a 30% pump based on a bullish retail narrative, and it was just a pump into the support and resistance area, which also aligns with the 0.5, and I just executed here the short, and that's it, based on the US 100, based on the Nasdaq, based on Palantir itself. it's nothing super complicated, actually. I mean, it's overextended. We are in premium. I expect Palantir to go a little bit lower from here. So why wouldn't I take this short? And as said, it's nothing complicated. I could look at this at every time frame and I see the damn support and resistance level here because it's a super reactive level, and a 30% pump is not nothing based on the bullish narrative. You see, as said, it's nothing complicated, and all is based on the Nasdaq because if the US tech sector is not doing well, Palantir is most likely not to outperform that. Also took a TP at IBKR, Interactive Brokers. You guys know my high time frame thesis, similar chart. They all look pretty much similar, right? We all had, like, on all of them, we had super aggressive rallies. And it is time that they pull back a little bit. We have this high time frame 3 drive. We broke this here. I entered my TP, and here at the range low, now also the Nasdaq on the range at the range low, I decided to do a 25% TP simply because I can. I mean, it's at almost 3R. It's one of my bigger positions, and I don't want to round trip the whole thing. But as long as it keeps trending down, I try to hold the majority of this position. And here, one of my short hedges, you know about that one, guys, QBT. I took a stop loss here. I took a long here, and I now took the stop loss yesterday for this idea. It should act as hedge against my high time frame swing shorts. And it's an interesting demand area, but as said, if the US tech sector is not doing well, this could easily nuke even lower. I mean, it's just a pump and dump. Interesting narrative, but I mean, look at the chart. This is nothing you would want to hold with a buy and hold perspective. This is rather something you should trade. And should the Nasdaq line up, this is something you might want to invest as from a narrative perspective. But it's not the only one. We have a lot of interesting quantum computing companies. I've showed some already. Form here, for example, and also Skytel. Super interesting charts. They're also due for a pullback in my view. And once they do, I will be ready to scoop up some of them for a discount. Also here, Xiaomi retesting the previous all-time high. Nothing super optimal, but it's from the Hong Kong Stock Exchange. We might have some rotations coming up between US and China. We will see. It's an interesting company involved into robotics, building phones, and general tech, and its exposure to China, which I like at the moment, to be honest. And to finish things up, let's have a quick look at the most important crypto majors, which is USDT, still at the range high. Locally speaking, back at the middle of the range. So if you still think it's a good idea to build some crypto exposure, it's rather here than down here, obviously. But at the same time, we start seeing a shift in trend here. So let's see how this is developing. And also USDC, I said I can't really see how it should reverse a higher time frame reversal from here. We had a small reaction from here, but let's see what happens. To be honest, this doesn't look super bearish to me, and I wouldn't be surprised to see a gap up here. And then once again, if you know the thesis, don't forget about USDT. And yeah, that's said, guys. Still prepared for everything. Still long ETH here. Still short BTC. Should we get this liquidation to the level lower, I will do a big TP simply because then the meat of the move is probably over. And I want to remove some exposure from the exchange. So we get this liquidation here. I will TP into the liquidation most likely, and a big chunk to simply remove money from those exchanges, because I think should we get another leg down, if you remember here, it's becoming the most dangerous part of the cycle for crypto companies to fail, for exchanges to fail, because yeah, obviously there is a lot of hidden risk in the system that is completely leveraged and is not backed up, mostly not backed up by anything fundamentally solid. It's pretty much most of it, 90% of crypto is hot air. And obviously, once the plug gets pulled, there will definitely be big holes in the system. And yeah, talking about holes in the system, I just remembered that yesterday we had some bank fears. I think it was UBS, that UBS is holding withdrawals from investment funds of their customers, and it's super interesting. First of all, that it comes up now. So why now? Second of all, if you think about it logically, it makes perfect sense that banks are going to fail. I mean, they will probably not fail. They get bailed out most likely anyway. But What I mean is there was a decade of zero interest rates, and now suddenly interest rates are rising, and right now it doesn't seem like they're going to come lower anytime soon. And this adds pressure to the system. So we can look at the US 10-year yield, and I did analysis here, and I look at the 10-year because it has the most history. And look at this time here from pretty much 1940s after the war, it just trended up, and we reached a peak of 15% here simply because inflation was out of control and everything, and they tried to counter this. And ever since then, this was in a downtrend. So monetary policy was easing pretty much, and it was very optimal to be in private equity, right? And this is maybe changing here. If we look at that, we break this trend right now. We've made the first higher high pretty much since the 1980s. And this is not nothing. This is not nothing. People don't care about that stuff too much. But in the end, this is super important because money gets more expensive, and all those equities that rose so much in the previous decades, like for example, real estate. Real estate is a market that's only running on debt, usually for the majority. And so people took loans for very low interest rates the past 10 years, and or even 15 years. And now those real estate prices, they hit the all-time high around 2020 because people got free money. Everybody was wanted to buy houses, and simple supply and demand rules, right? If there is a lot of demand, prices will rise, and prices rose. And now real estate is coming back a bit because people run out of money. People cannot go to the bank and easily take a loan anymore because interest rates are way higher now. And also those people that bought it for very low, they got under pressure with maybe flexible loans or even because they need to refinance very soon. And so maybe some of those people, and they will become more the higher interest rates go, need to sell their homes. And again, supply and demand, more supply, prices fall. And so there is pretty much a hole in the system in the real estate market. Because where is the money? If people bought houses around all-time high, prices fell 30%, I think, around 30% in the US. So they don't get the whole money back. They paid for the house, so they can't pay back the whole mortgage. So they still have debt. So where is the difference of this money? Where went this difference? It simply went to the people who sold their houses for a big profit over the last years. And so you have this systemic risk, and I'm not saying it's nothing, but it's interesting that it's coming up now because, in my view, this is obvious since quite a while already. And now looking at the charts again, we have a war breaking out, something like that is affecting now the oil prices and everything. And obviously, that's not good for the world, not good for the market, not good for the people who live in those war zones. But prices barely reacted to that. And if you look at crypto, even I think it was late February somewhere here, prices pretty much went up here on ETH 25%. It's how stupid this market is. It's not it's not based on fundamentals or anything. It's just narratives, and it's always the opposite of what people think it is. And the US equity markets, they didn't get affected as much, but now if there is a financial crisis on the horizon, they start nuking. And it just shows what is really important to the markets. A bank failure is much more significant to the financial markets than a war, because a war is business, pretty much. I know it sounds harsh, but I mean, the weapons industry and those politicians fighting about territory, fighting about resources and everything, it's business, really. And a bank failure is not business. A bank failure is the opposite of business. It will show that there is a hole in the system and that money is gone. They need potentially a bailout and all of that. It's a much more systemic risk to the markets itself. And so that's why the market is collapsing way more when there is a potential bank failure on the horizon. I mean, it's obviously it's super stupid. It's like it just shows how broken our world is. A war is not that significant than a fucking bank failure, and this is just a perfect example of how broken the system really is. We entered a very dangerous phase of the market, so manage your risk properly, see everything for what it is, and don't get lost in all the noise out there. Look at basic fundamental TA, apply some liquidity knowledge, and don't get lost in any riddle kind of stuff. It's actually crazy to see how confused people are uh, about those things. It's way simpler than people make it, to be honest. People just apply their buys on some random numbers they find in the internet, and it's more paranoia and schizophrenia than analysis in my view. So guys, stay safe, have a great weekend. Bye.